Hi guys, this is Dan from the Investment ABC, and in this video I want to talk about the recent crash in the stock markets. In my last video last month, I was talking about how the crypto crash was a harbinger of a stock market crash and that a waterfall crash was imminent. Since that call, the Dow dropped almost 3,000 points and Bitcoin dropped from 6,200 to around $3,200 in the lows. We saw then a nice counter trend rally to above $4,000 in Bitcoin the last couple of days. Now the question is, where are these markets going in 2019? The Dow is quite oversold in the short term, so that I expect the crash is slowing and the Dow will consolidate in the 22,000 to 23,000 range for some time. We will most likely hear that Trump struck some sort of a deal to get his wall, and we will see most likely a short stock market rally. That will be a good point to increase my short position on the Dow. After that, we will see the markets fall further in 2019 until some sort of crisis event is triggered from somewhere. The chart of Deutsche Bank looks like Lehman shortly before the collapse to zero, but the trigger could also come from China or some other emerging market. I don't know how many points lower the Dow will be by then, but I'm sure it will be significantly lower. I watched Chairman Powell's Fed conference, and he was actually way more hawkish than I expected. I was sure he would raise the interest rates, but I was expecting that they would say that they are more data dependent and that rate hikes are not guaranteed. But the way Powell was acting is like I am deaf, blind and dumb, although it is obvious that the economy is cooling down, and in my eyes we already entered the bear market. The market realized now that the Fed does not have its back anymore and panicked. Investors know that the crazy gains in 2017 were only achievable because of the ultra low interest rates we had. Corporations and investors borrowed huge amounts of money for free. The first, they started to buy back their own shares, and the latter, they started to speculate, sometimes on dangerous margin. Now the liquidity begins to dry up and investors start to run for the hills. Before everyone is realizing that we are in a recession and that earnings and dividend yields are beginning to drop significantly very soon, the yield curve is a good indicator to spot recessions. When the yield curve inverts, that means when short-term bonds have higher yields than long-term bonds, the probability of a bear market as a leading indicator and a recession is very high. Why is the yield curve such a good indicator for troubles in the markets, you ask? The answer is easy. The bond investors are the investors with the most money and influence. They have their connections and word is spreading between these rich people. One of the most important things in the markets is to know what the Fed makes, that the Fed makes or breaks the markets. So the people, friends, family, and also their friends and families, they know what's going on. They know what's going to happen. So for you, if you pay attention, there are enough signs to know when the party is ending. Just have your eyes open and listen to what the markets are trying to say. Right now, the spread between the 2-year and the 10-year treasuries are getting smaller and smaller, and very soon the yield curve will completely invert. We could also observe major insider selling during the whole year of 2018, even before this crash began. Like I said, at some point investors will realize that we are in a recession and earnings will start to melt like ice cream in the sun, and they will flood into the bond market and into cash at that time. Corporations will struggle to service a huge amount of debts and won't be able to do any stock buybacks anymore. So another catalyst for the current bull market will break away. Since we have such low interest rates as a base for the next recession, the next bear market will be one of the strongest in recent history in my eyes. And maybe we won't see these current inflationary adjusted price levels for another, God knows, 10 to 15 years. The dependency of the markets for ever increasing liquidity is a sign how fragile our whole economic system is. It is no surprise that 2018 was the worst year for assets in more than 100 years, with 93% of all assets down according to Deutsche Bank. At some point, this system will fall apart from one day to the other, but in retrospect, the signs were clearly there to see. We will see probably gold and silver prices be stable or even rise against the dollar, although the dollar will appreciate compared to all other currencies from here on now. This is the time to preserve your wealth, but I'm sure we will see some novice investors calling for fantastic buying opportunities with every leg lower. The question is, what will happen when the Fed triggers the next crisis and there is no room to lower their interest rates anymore? Another round of QE? I don't think so. I think the most likely scenario is that the Fed used the last 10 years to come up with another currency as a replacement for the dollar. They know that they can't bail out the banks and major corporations like in 2008, 2009. The people will not tolerate that anymore. The Yellow Vest movement in France showed that there is not enough tolerance left from the people and that they are one step away from losing control. What the people in power will do is most likely that they won't save the system during the next crisis and unleash chaos around the globe. Why do you think Donald Trump suddenly pulls the troops back from Syria? In my eyes, we will see major things happening in the next 1 to 2 years, so it's better to prepare yourself for that. Everything I said is, like always, no financial advice. Do your own due diligence and never follow blindly. It doesn't matter who it is. I hope you liked this video. Feel free to watch my other videos where I predicted the stock market crash and the Bitcoin crash shortly before we headed lower. Press the like button to support this channel and subscribe for more videos. Take care and see you soon. Thank you.